All right, my friend, John writes in, he has some questions about Roth IRAs, 401k, Roth 401ks, and the backdoor Roth, so let's talk about, he's 54, he and his wife are Marine Corps and Army, I can't tell, reservist, yeah, reservist. So if you're reservist in the Marine, in the military, you'll get your pension starting at 60. 54 years old, they both maxed their 401ks, they got some rental properties. Started Roth only a few years back. Let's see. He's trying to retire. He and his better half are trying to retire in next year at 55. All right, so here's his question. It's pretty interesting, actually. And this is an example. I think we make this a lot more difficult than it needs to be. And John, don't take that wrong. I think I think we get so caught up in the tax deferral game, the tax game. You got to keep it simple, stupid. And we get so caught up in this ability to deduct stuff, to do this, do that. I'm just like, is it worth it? So anyway, we'll tell you guys what John had asked. A good question. So remember, he's going to stop working at 55. Thus, he has no earned income between he and his beautiful. And they're not going to have ability to obviously to contribute to a Roth because at no earned income, you can't contribute. So his question, should we then actually work part-time from 55 and beyond so we can qualify for a Roth contribution? Or should I even create a company like an LLC or something for my 2 rental properties and pay myself a salary? Remember, it's got to be salary. It can't be a dividend, my friend. And my wife is a property manager to have earned income in order to qualify for Roth. All right, so again, he's taking his pension at 60. He'll defer Social Security to later, which is the way to go. And he's got 5 years. So in 5 years, should he work so he can earn income so he can put into a Roth? No, man. I mean, I guess you could. Why not just convert what you have? I mean, so you got a 401k that's been maxed out. I don't get why you would want to, work to go through the pay. I mean, look, I'm lazy by nature. I'm not going to lie to you. I'm lazy. I'd rather pay the tax man a couple extra $100 a year than have to keep receipts a mile long. It makes no sense to me at all why people go through all this loopholes to get an extra $200 in tax write. I just literally just don't get it. So for you, set up all the paperwork, create an LLC, do the 1099 we have, which because you're self-employed, you have a 1099, you have to have withholding taxes on FICA from your side and the employer's side, as the employee and the employer. Have all that crap, get the QuickBooks, all the payroll going, or just say, screw all that. I'm just going to take my rental income, pay tax on it as passive income, which it is. And on top of that, I'm going to go ahead and convert my 401k to a Roth. I mean, you got 5 years to do it before your pension kicks in. And even after that, you can still do it too. Yeah, it'll be taxed a little bit higher, but don't make this difficult. You got to keep it simple. I don't know why. We have this mentality in America that you got to defer at all times, take advantage of everything the IRS has given or the Congress has given you, or else you're stupid or something. I find that to be, man, I can't tell you how many times the energy people have used to make sure they got their cost base to the penny. And even after that, do you think the IRS can't find out something was wrong with your tax code? I sit there and it boggles the mind. I'm like, just give the IRS, what did Jesus say? Give to Caesar what's Caesar, give to God what's God's. All right, how do you know how much is Caesar's? How do you know how much is God's? Well, God doesn't say. Jesus didn't say that 32.8% is Caesar's and 61, whatever it is, 9.8 is God's. He didn't say it like that. He just give to Caesar what's Caesar's, give to God's what's God's. I just stop, not you, my man, John, but we have to stop this mentality that says paying taxes is the stupidest thing to ever go into mankind. We're all going to pay them. You're not getting around that. You're going to do, maybe you'll end up paying a little, maybe you'll pay a little bit less than me because I'm lazy and I just don't care that much. But I'm comfortable with that. I'm very comfortable in my skin. If the IRS got an extra $200, whoop-de-doo. I'm okay with that. I'm pleased and blessed to live in the good old US of A. If the good old US of A and the government squanders an extra $200 off my tax each and every year, I literally don't care. They're going to squander it anyway, regardless of what they got from me or not. So at this stage, I don't care. Do I want to keep all the records? No. Should I? Maybe, but I literally don't care. So for me, it's just not worth it. So no, don't go through all that crap. It's nuts. So I want to talk about all the people who say, I got to defer every single penny I can into my 401k. I tell you, man, I am 100% in disagreement with that. But Josh, then I'll pay 15% capital gain and long-term long-term capital gain and qualified dividend. Well, I could have been deferring that money, the opportunity cost, and this, that, and the other. I said, really? Really? Is it really going to work out the way you think? Because A, you're never getting around the tax man. B, if you think the tax man doesn't know how to set it up against you, I would think again, please. And C, at the end of the day, you don't have access to that scratch. You don't until you're 59 and a half. You just don't unless you take a loan. But even then, it's not accessible because you still got to pay it back. All right, so I don't get this whole thing about deferring at all costs. And by the way, are you really in the 12%? Are you really paying capital gains tax and qualified dividends? Maybe you're in the 12% tax bracket. You ever thought about that? But I need a mortgage deduction. I need an interest exclusion. Married filing jointly, you have $24,400 of standard deductions. Are you really getting a write-off on that mortgage interest? Something to think about, isn't it? Think about it. All right, so going back to John, I just don't see the value of setting up all that stuff in order to put I can't remember what it is now, $6,000 to $7,000 in a Roth IRA. I just convert your 401k and be done with it. All right, we'll see you next time.